we went quiet.
No.
Alright,
No.
you all knew what it was about.
Somewhere else? Oh.
Great, so we were going to wait till Mark was here because Mark and Magnus and John over there, John can give away. So they're the directors of Perfectus, which is a youth entrepreneur club at UWA. And so they host this amazing space, which is a co-working space by day, but hosts a lot of amazing events quite regularly, so make sure you check out their board. And so really I'm going to hand this session over to Lily. So this is wonderful to have everyone here and in the space, and obviously it's Perfectus hosting, CSI alumni hosting, and there's a few of us here from that group, and also Enactus as well, and U.Lab Perth. So we've got 4 people hosting Lily groups, which is great. And it's really amazing to have Lily here, and we even have sirens going off. So Lily has been focused on and passionate about values-based banking, and so how you actually bank with values. And she's got, I think, my dream job really. So she's been travelling around the world and visiting all the ethical banks and finding out stories from them and seeing what works. And so we're really lucky to have her here today, and she just happens to be visiting a friend in Perth. And so I said, well, while you're here, do you think you could also talk? And so we've also had a great conversation with Michelle from Beyond Bank today, who is our values-based bank in Perth, so it's great to have you 3 here as well. So I will hand it over to Lily to share a little bit about this.
Sure. Okay, so thank you all for coming, and I just want to thank Katie for giving me a great whirlwind tour of Perth. Unexpected but really enjoyable. So just a little bit on my background to start is, so I graduated recently with a master's in city planning from MIT and focused on local economic development and community organized banking, and then was lucky enough to get a position at something called the Community Innovators Lab, which is based in the department, and it's essentially the basic idea of CoLab is that it works with innovation at the margins, and so it works based on the idea that people who have been sort of most marginalized and at the edges of like the economic system, the social system, the political system understand best how that system is broken, and so where it can be fixed. And so we work with community leaders, network organizers on a number of different issues, but we are sort of conveners and facilitators and try to co-create knowledge and solutions. So right now I'm working with my boss, Katrin Kaufer, who is also with the Presidency Institute, which some of you may know from the U.Lab. And we are working to create something called a massive open online course. And massive open online courses are essentially free online courses available to anybody in the world to register as long as they have internet or can access internet and a computer. Registration is often between 5,000 or 50,000 people. It can be a huge amount of people, it can be a small amount of people. But it's really, I think, revolutionizing the way information is accessed around the world. So we're doing that. We're doing it about values-based banking. So right now, as Katie said, I'm actually in the middle of this global tour of values-based banks. We work particularly with a network called the Global Alliance for Banking on Values. This is a lot of acronyms. We're working with them, and I'm traveling to different banks to sort of collect knowledge for this course. So there's actually not, values-based banking isn't necessarily new, but there hasn't been a lot of sort of knowledge creation in the field yet, sort of across banks. And so we're kind of building, in terms of this course material, we're kind of building the plane as we're flying it. And so that being said, I'm actually, not an expert on values-based banking. I'm sort of on my own learning journey, so I'm going to try and take you along there with me, but there might not be some things I'd be able to answer, but bear with me on that. So I also need help remembering what I was going to say. So I didn't actually. I was always interested in local economic development, but I didn't always expect to sort of get involved with banking or bankers, and I always sort of understood in sort of thinking about reimagining local economy, I almost thought of banks as roadblocks in a way. a lot of the time, and I think that actually stemmed from maybe a fundamental misunderstanding of, what banks are and what they do. So kind of I was reflecting about that, and I was thinking like, so when I was a kid, I got an allowance. I think it was $2 a week or something like that, and I also got change for doing chores anyway. And so I wanted to save my money, and so when I saved my money, I put it in a piggy bank, right? And in doing so, I realized that I think that actually fundamentally, gave me a misunderstanding of how banks work, because I would save money, and the way I understood is that when I put money in a bank, or when I open an account, and I try to save my money, it's sitting there, right, waiting for me to come get it, in some vault, locked up underground, and it turns out that's actually, not true, right? So when you put money in a bank, the money is being invested, it's being put in financial markets, it's being put into loans, it's, generally circulating through the economy around you. So in some ways that's a good thing, right? I don't have to think about it, I'm getting some, interest return, my money is in other people's hands. I know it's doing stuff in the economy, but on the other hand, how many people have a really good sense of what their money is doing when it's in a bank? Where it's being invested? Kind of, yeah. Not much. I'm including myself in this. I don't actually have a great sense of that. So, say you're interested in, in protecting the environment, you're interested in labor rights, you're interested in ethical supply chains, you're interested in, local organic food, that's a problem, right? Because you don't know how your money's being spent. And in fact, your money could be working against you. So I think two of the major things that we've sort of found in preparing this course and sort of working with values-based banks more generally is that there's two major challenges, and one is that people often, and again, including myself in this, don't really understand what a bank does with their money, right? And the second is that they often see banks as institutions that they don't have any power over, right? So to start with the first one, a lot of mainstream banks, they're so what you and I would think of as banking, like transactions, loans, mortgages, things like that. So the real economy, what we call the real economy, which is the part of the economy tied up in or focused on sort of the production of goods and services. It's actually a really small part of their business. A lot of their business, the majority of their business is in financial markets. Why is that? It's because it can be very profitable, and their main motive is often, their mandate is often to make money for their shareholders, right? And not necessarily serve their clients. So their clients are sort of a means to an end, which is making profit for their shareholders, which is one way of doing business, right? And this is where sort of values-based banking comes in, because they sort of operate in a different space. So they are banks that are focused primarily on serving their clients and their communities first, before their shareholders, although, side note, sometimes their shareholders are also their members, their cooperatives, like Beyond Bank, a credit union. So this means sort of a number of things, which is first, operating primarily in the real economy. Like I mentioned, the part of the economy associated with producing goods and services. So more so what you and I would think of as banking. And then transparent and inclusive governance. Like I said, a lot of them are cooperatively owned. It's always very clear sort of who owns what, how things are run, and where your money's going. They're also grounded in the communities that they serve. So if I am, and there's also spending money in the communities that they serve, so I know that if I'm putting my money in a values-based bank, it's most likely circulating within my own community or within some realm that I care about. So maybe it's the environment, or maybe it's renewable energy, something like that. And four, they focus also on, like I said, long-term sustainability for the environment, but also their community. So it's sustainability in a more holistic sense, not just environmental sustainability, and also the sustainability of the bank as well. So in other words, these banks have a values-aligned mission, and it's their brand, and it's everything they do. So it's sort of baked into the organization. It's baked into their culture, where they make loans, how they make decisions. It's not just like a one-off or a 1% of their after-tax profit going to communities. It's sort of ingrained in everything that they do. So And it's also important to know that it's not necessarily just philanthropy or charity. It's also a business. It's also banking. They're also making profit. It's just profit is not the primary motive. There's other variables in there when they're making the calculation of what's valuable, what's risky, what's the calculation that banks have to make. They're adding in other variables and sort of looking at other impacts that they have. So and so what I see as really central to values-based banks is this sort of ecosystem type thinking. So I was just, and I'm going to talk about Van City a lot. So I was just, before coming here, I was in Vancouver at Van City Credit Union, which is the largest credit union in Canada. It also happens to be a values-based bank. It's has something like 500,000 members in British Columbia, and I think assets of 50 billion. So it's actually a very big bank, and it's doing a lot of good work. And so when Van City thinks, something that they encourage in their employees, like when they think about an investment or when they think about giving a loan, they do an exercise called impact mapping. So what this is essentially a way to envision, if I'm giving, a loan to this business, what is it actually, aside from the profit, the potential profit that the business is going to make or things like that, what else can we bring into this calculation? So they actually map out, so who are all the stakeholders, where is the money flowing, what are the potential impacts? So, for example, and I was telling Katie about this today, but they work with, Van City in particular works with an urban organic farm called Soul Food, which it's actually funny because you can look out the bank, it's actually right there in the vacant property, but they have these raised beds that they are mobile raised beds where they grow organic food that they then sell to gourmet restaurants in Vancouver, and they do it on vacant properties that are what they call brownfields. I don't know if that term is common here, but it essentially means that it's like post-industrial land. It would have to be totally dug out if you're going to use it again because it's polluted. They find another use for this, and they also employ people from Vancouver who are otherwise hard to employ. So ex-cons, recovering drug addicts, sometimes homeless people. And so when you think about this ecosystem, you're giving a loan, you think, okay, well, it's not just the profit of the business, but it's also the employees, their families. Through Van City, they get access to financial literacy programs. There's the impact, so for example, the reduction in carbon emissions because the restaurants are buying hyper-local organic food. So you can sort of imagine this whole map that gets laid out. And so this is how they think about decisions this is how they make decisions on a day-to-day basis, right? So that's pretty interesting. I think that's actually pretty radically different in a lot of ways. And this sort of maps into their whole other community investment strategy, right? So what I thought was also really interesting about Van City is that they work not only with their members, but they sort of see Vancouver as like a holistic community that they want to help. So they work also with non-members who may come to them for a grant or who may come to them for things like business training. They have mentorship programs. So if I am a business, I go to Van City and they have a member who has some knowledge that might help me, they'll set me up with them. They sort of do all of this networking, and they are working to really build an ecosystem around themselves. And so the question is, well, that's not really, if I'm not a member, I'm not making them any money, right? But they have a very long-term view of sort of what community benefit is and how they can, also a long-term view of their business model. So they have this idea of reciprocity, they hope that, and it oftentimes is true and it's working really well for them, if I go to them and I get all these resources and I get plugged into this community and they help me with my supply chain, maybe it's an ethical or sustainable supply chain, then eventually I might open my business account with them, right? Or I'm producing some other kind of good, and if I'm producing good in the community, then that's actually fulfilling their mission, regardless of whether or not it's producing profit, because it's helping their members. So it's also cooperative, it's helping their members who are in the community. So in thinking about sort of what banks do, one of my favorite aspects, and again I'm going to use a Van City example, is this idea. So they're trying to produce benefit in their communities, which means they're also, when they're thinking about creating new products, when they're thinking about serving their clients, it's all centered around what their clients need. So sort of, we call it client-centric innovation. So rather than creating a product or offering because it maximizes profit for the bank and for the shareholders, they create it because it's something that's needed. So they go to their members and they say, you know, what's needed to improve your well-being? What do you need from us now? You know, in the current state of the economy, what do you need from us long-term? So another example is that in the US and Canada, predatory lending is a huge issue right now. So we have a lot of people, unlike in Australia where most people have bank accounts, we actually have a huge, like 17% of the population, at least in the US, is completely unbanked. So they don't have bank accounts. And another big percentage is underbanked, which means they don't have access to a full sort of suite of financial services that you would expect. So there's these things called, which I think you have here as well, like the payday loans, like the financial services, right? And they say, okay, great, like you need money fast. Okay, we got money. We can get you in and out in 10 minutes. We'll give you great service with a smile, but we also have a 600% APR. So it's a serious problem. So for some people, if they can maybe get their paycheck and pay back the loan the next day, it's not really an issue. But for people who can't do that, or who take out the loan for a longer period of time, it can actually start a really vicious cycle of debt. And so Van City actually noticed that some of their own members were going to payday lenders. And they said, okay, well, this is a failure, because this is sort of risky and we see it as unethical and it's causing problems for our members, this is a failure on us, because we're not serving them, we're not giving them what they need. So they started, I think this was about 2 years ago, they started a year-long, year-and-a-half-long research project, essentially saying, not saying like, we're gonna do X product or Y product, they're saying, okay, what do our members actually need? Why are they not coming to us when they need money? So on and so on. So they like went to payday lenders, they talked to a bunch of their members, they talked to non-members, they talked to their branches. They did this whole process and they ended up coming out with something that they call fair and fast loans, which is essentially a payday loan alternative, and they could get people in and out in an hour, which is pretty fast, or under an hour now, I think, and it's like 19% APR, and it's loans that are under $1,500, which is also fairly uncommon for a bank to give loans that are that small. Because if you think about it, in the same amount of time, or a little bit more time, they could be doing a $500,000 mortgage, right? And so when you're a loan officer at a bank and you're saying, okay, $500,000 mortgage, $500 loan, in terms of pure sort of monetary value for the bank, obviously you owe the $500,000 mortgage. And Van City is saying, well, actually, we need to serve all of our members, and so we're gonna sort of prop this up. And again, this is like the margins are lower, but they see it as in the long-term perspective, as they're saying, okay, well, right now these members, for whatever reason, are unable to, they need money fast, they need some help, and in the long term, hopefully they will come to us for a mortgage, right? Because it'll put them in a better financial position, so they can sort of build up their credit, they can, do things that put them in a better place, right? And it's actually, the interesting thing is actually they did a soft launch, which means that they essentially didn't advertise it. But if people came in asking for money, they'd say, oh, we actually have this program now. So last year, I think they gave about 700 or 800 loans, which actually saved those members sort of theoretically $1 million in interest that they would have paid had they gone to a payday lender. So it's actually a lot of money, and that's a very small launch. And so if you think about the number of people who are using, at least in the US and Canada, who are using payday lenders, the number is huge. So if you think of the potential savings that could be in people's pockets, if this were actually a more common thing, it's a big deal. So so through Van City, and I've harped on Van City, but you sort of start to see that this kind of decision making and this sort of ecosystem thinking, this long-term thinking is an example of how it's really embedded in the culture of the organization. So, and I think this is really important, is to understand that values-based banks are not banks with programs, necessarily like, a good program or a good this or a good that, but it's really embedded in the culture of the organization, how they make all their decisions, what they're thinking about on a day-to-day basis. And it also requires a more holistic understanding of what a bank is, like what the purpose of a bank is. So in Van City's case and in other cases, you see that it's not just a bank, but it's also a convener and a network builder. It hosts community spaces. It sort of serves this whole other purpose that you wouldn't really think of, for banking. And it also requires the bank to see itself as an entity that exists to serve its members or to serve its clients, right? And the community at large. So that, way back ago, I said there were 2 points. This brings me to my second point, which is that, again, we find that people, and again, myself included, struggle to understand banks as organizations and institutions that we have power over. So I think of banks and I think of, Bank of America, I think of Deutsche Bank, I think of, ANZ, or, all of these big banks that I feel like I can't make a difference, right? But actually, when you think about it, banks only exist because I put my money in a bank, and that's crucial to its business, right? And you put your money in a bank, and we all put our money in banks, and that's where their power comes from. Because money is a statement of trust, and we're saying, I trust you to keep and spend my money, right? So they are. So on one hand, they are the all-powerful institutions that we think they are, and on the other hand, they're not, because the power comes from our decision to put our money in that bank, and also our ability to organize our own money. So there's another story that I'll tell that is actually sort of was my avenue into values-based banking. This bank isn't part of the network, but I think it's a really interesting example. So there's a bank called Banco Palmas, which is based in Fortaleza, Brazil, which is on a city on the northeast coast. It's actually a lot like very nice beaches. It's actually, so to paint a picture of the city, it's like beautiful, beautiful beaches. It's the top tourist, like in-country tourist destination for Brazilians, but it's also one of the most unequal cities in the world. It's also one of the most violent cities in the world, so it's very common, and the violence is getting worse, so it's like some neighborhoods, so just not even the whole city, but neighborhoods alone will have about 40 murders per month. So there's huge issues, and a lot of that stems from the inequality that exists. And a lot of that was actually promoted or sort of started in the 1970s, when at the time Brazil was under dictatorship. But the government decided to build out the CBD along the beach, so they wanted to build hotels, and at the time there were huge communities of fishermen living along the shore, and they all got forcibly removed and moved inland. And so they were essentially, imagine being taken, you have no home, you no longer have a livelihood, right? And you're moved to another location in the city. And so one of these communities was relocated, became a neighborhood called Palmeiras, and they had to build their own homes, they had to organize for, to build their own sanitation, everything. And so there actually grew this big, and there was also a big sort of culture of this at the time in Brazil, but there was a big culture in the neighborhood of community organizing. So they ended up fighting to win, to sort of force the city to add in water, to add in electricity. Then everything was a fight, right? It wasn't just given to them. They had to sort of organize the neighborhood, they had to organize people and fight for these resources. But what ended up happening is that the local economy sort of didn't grow as the city or the neighborhood got urbanized, which means all of a sudden you're getting a phone bill, you're getting an electricity bill, you're getting water bills, and you still have no job, right? Or you still have no way to really make a lot of money to pay for that. So a lot of the people who fought for all those resources were actually then having to move out of the neighborhood because they couldn't afford it anymore. And which is kind of ironic. So they, with that culture of organizing, said, okay, well, this isn't right. Like, we fought for all of this, and we can't just, be all forced to leave. And so they asked what I think is a really interesting and profound question. They asked themselves, okay, why are we poor? And some, old lady stood up and said, well, we're poor because I'm poor because I have no money. It's like, oh, that's actually really interesting. We're poor because we have no money, right? And so they said, okay, well, they did a community survey, and they said, okay, actually, we do have money. They asked, what people were buying, how much money they had, where they were buying. And they found out that actually people had money. There was millions of reais in the neighborhood. But anytime somebody got money, they were spending it outside of the neighborhood because there were no local businesses, right? So you take the bus into the city, and you spend your money their version of Walmart or the grocery store or whatever. And so money was sort of flowing out. Anything that came in was flowing out again. And so they said, okay, well, let's start like local businesses. And said, okay, well, nobody will bank with us. There's no banks for miles. And when we go to the center of the city and say, I'd like a loan to start a business, they say, no way, right? You're poor, you're risky, it's not going to happen. So ultimately what they did is, out of need and out of this desire to sort of stimulate local development, they created their own bank, which became Banco Comas. That was about 15 years ago. It still exists. It's completely run, managed, operated by locals in the community, and these are people, education is not great, so it's actually really, it's really interesting. And it's much more than just a bank, because they're actually, because of also this history of organizing, they are the sort of heart and the soul of the community. So everything, all the arts, all the sort of events, all the politics, everything goes through this bank. So sort of like Grant City, it's a lot more than a bank. And they also now run, so they've also tried to spread their model across Brazil, so they now run a network of 100 other community banks that have sprung up since then, based on their model. So you see sort of the power of reimagining, what is money, what can we do with our money, what is banking, so I think that's a really powerful story of sort of reimagining our agency about sort of around banking. And so it's something that I ask myself a lot when I'm doing this work, because I never really set out to become interested in banking. It's why banks? Why do we look into these institutions? And I think the answer is pretty clearly that they're sort of they're at the heart of the economy. They're like the heart that pumps the blood through the economy. So they're the primary intermediaries between borrowers and lenders. They work with money, which is a totally unique commodity. It's a totally unique thing. And we essentially give them the power to make the ultimate decisions about where money flows. So if we're thinking about, what it takes to transform a place, which I know is something that we're thinking about a lot in Perth. If you're looking at cross-sector collaboration, if you're looking to build a more just and sustainable society, I see banks as falling in some way right in the middle of all of that. They hold such a special place in the economy, and they live in that space that connects every single one of the sectors, right? If you think about almost anything, almost everything needs a bank. So the way that we see it at Eco-Lab is that banks have a ton of potential as tools to facilitate economic and social transformation. So what we're working on at Eco-Lab is sort of sharing this idea and the possibility that banks and organizations, or can be organizations that align the needs of communities, of businesses, of individuals, of the environment, of all of these sort of different areas to build more healthy, equitable societies and democratic societies as well is an important element of it. So in other words, banks should be tools that serve you and serve your community, rather than businesses whose primary motive is to serve themselves. And sort of building off of that, I think, so values-based finance or values-based banking isn't necessarily a new idea. It's been going there's a bank in France, a values-based bank in France that's been around for 150 years. There's, Van City's been around for 70. These banks are not new. I think there's a new thirst for them, especially after the financial crisis, because people are all of a sudden sort of awakening to this idea that, this system might be pretty messed up, and what are the alternatives that we have? So a lot of the connections between these banks and between the banks and the organizations and the people that they could potentially serve are still very young. So there's actually a ton of room for knowledge sharing right now, and a ton of room for growth, and sort of building connections, which is essentially what we're trying to do with our MOOC. And I don't know if people are just being nice, but almost every time I bring up the idea of values-based banking, there's some sort of spark, because no matter what sector and no matter where you're working, if you're working in the social field, you think this could, what could this bank then finance? What could they give me a loan for? All these ideas. Who could they partner with? How could this idea be replicated in different communities? So we're trying to provide essentially a platform not only to spread the idea of values-based banking, sort of to people who don't know about it, but also to allow people in financial institutions, in values-based banks, to also share knowledge and start to build those connections. And it's helped by the fact that this sort of alliance, this global alliance already exists, but we're trying to expand it even further. But people are beyond bank today, which is amazing. And ultimately sort of provide a platform to allow these conversations to start happening, these like sparks of idea to turn into conversations between, people, the right people, and sort of turn it into actual, hopefully, social transformation. So that's what we're trying to do, and that's what I had to share for today. And I'd love to have not only questions, but just open the floor to say, what you all think and what you see as the possibilities in Perth and what's happening here.
Sorry, just a silly question. What's APR?
Annual percent, yeah.
Right, okay.
Yeah.
So I don't do accounting or banking.
Yeah.
So APR is okay, cool.
Yeah.
Are you aware of models or templates communities picking up to create a bank?
So the only community I'm aware of that has created a bank in and of itself, recently, is the Bank of Commerce example. But I mean, again, Granite City, for example, was started by Vancouverites, people from Vancouver, who it was 14 people around a table with $22 each who put it down and created a bank. That's now worth $50 billion, right? So these banks, and I know GLS, which is based in Germany, was started. It was a sort of a credit collective. They wanted to build a school. You know the story too as well, I think. But they wanted to build a school, and a group of families put money down, and one thing led to another, and all of a sudden, they're a bank, right? So a lot of these values-based banks have actually very organic roots, because it emerges, and this is also sort of what their philosophy is what they do emerges from needs that people have, and so a lot of these banks actually emerge from a need. Instead of, I want to start a bank, it's what is, people just realize, we have a need for a bank, and they create a bank.
Just a question for you.
Yeah,
Will
sure.
there be restrictions on calling yourself a bank in Australia?
No, there's not. I mean, I had the pleasure of meeting Lily today. So for those who don't know me, I'm Michelle from Beyond Bank Australia, and we are the Other Way to Bank as a community bank. So again, our model is very much based on supporting our customers and communities. So we don't have to respond to external shareholders. So just a bit of background there. But it was great to hear the insights, and I've actually met Tamara, the CEO at Van City, and they did some amazing work. But talking about going to a bank, we used to be United Credit Union here in Perth, and it's interesting going back to how the models began, because a lot of co-ops and credit unions came together about facilitating people who had money to give and people who needed money. And so they started very small, and sometimes those grassroots can get lost over time, but it's about bringing that back to the surface in terms of how they came together. So that's how the co-op for us began 30 odd years back, even longer. And then in 2009, I was talking today to Lily that Wayne Swan, the treasurer back then, actually announced the whole fifth pillar notion, which was, you've often got the four pillars, which is the four major banks, if we just talk about the Australian economy. And it was really about being able to promote that there is an alternative to the four banks, and the fifth pillar is those mutual organisations. So often a lot of the market research that we've done says that people don't understand what credit unions do, and can often be seen as the second cousins to the main banks. And it was about saying that it's an alternative for people, and it's about finding that place for people who value what that's about. So Wayne Swan brought about the fifth pillar policy, which said credit unions who have a minimum of 50 million in capital can actually now obtain a banking licence, and which all that meant was that you could put the word bank into your name. And so the market research says to us, well, if we could do that, then at least people would understand that we provide financial banking products and services, but make sure that the message doesn't get lost, that our model hasn't changed in why we exist in the first place, and that's about being accountable to our customers and the community. So that's when we transitioned from what was United Community to then become Beyond Bank, and that whole notion that we are more than just a bank, and there is an alternative there. And it does come back to immersing yourself in our culture, that we're all about people helping people and being a
facilitating that process.
I was just wondering, value-based banking uses money, obviously. And one thing I want to consider is kind of value-based banking use cryptocurrency, which is driven by demand, and isn't it in a sense more stable?
Sorry, which currency?
Cryptocurrency, so like Bitcoin, for example.
I don't know much about Bitcoin. Is it more stable? Because I thought it was not very stable.
Well, I would say in a sense it is more stable than your basic currency. For example, our money now. For example, I think the past 10 years ago, you could just buy, for example, use $2 to buy a cake, a muffin.
Right.
Now, if you use that $2, you get half a muffin. So in terms of Bitcoin, they have like a fixed set of cash, so 21 million,
Right.
and this spreads out. You can buy this cash, and that 21 million is never not increased; it's never increased. So in the sense that maintains the value of that currency, and it's just purely driven by demand because banks keep printing money, and in that sense, our money does get devalued over the years. So,
But banks aren't, at least I don't know about here, but in the U.S. banks aren't printing money. It's the federal government that makes the decision to print money,
yeah.
right? So I don't know if they would really delve into that. I do know, this is not really answering your question because I don't have an answer to that question. But I do know that, so for example, Banco Palmas they created their own currency. So they created a local currency because they wanted to stimulate growth in the neighborhood, economic, and sort of encourage local consumption. So they printed something called the Palma, which is 1-to-1 for the real. And that allowed them to say, okay, well, these businesses, like certain businesses would accept the currency and they'd give out consumption loans in that currency. And if you spent money in that currency, you'd get a discount. It was like a small discount, like 10 or 15%. But it really, it wasn't sort of a long-term strategy. Like they didn't want that to sort of grow into a big thing, but it was just to kind of spark that idea of local consumption and sort of also help people visualize that idea of circulation within the community. So that is not answering your question, but sort of a different, yeah.
Thanks for that.
Yes.
That's answered half.
Yeah.
But that is still going, isn't it? Is that still in circulation?
It's still in circulation, but it's not sort of campaign focused anymore. Yeah.
Well, I was wondering, so when you make a deposit and then the bank takes your money and invests it into a community project, what happens when you want to withdraw money?
I mean, it's the same thing with any bank. They have reserves, right? Banks have, you can probably explain this better than I can, but banks have a certain amount of money that they have to keep in reserve. So if I go to the bank, I'll be able to get my money out. If it would be a problem if everybody rushed the bank, they don't actually physically have all of your money there, right? But it works the same as any other bank. So if I put my money in, ANZ, it's the same thing. They're taking most of that money. They're leaving a little bit in reserve, and they're taking most of that money and just spending it elsewhere. Yeah.
I think the thing we have with those big four banks is people assume that basically the deposits are guaranteed by the federal government. And I think they are to a certain value, and that's something that small banks probably don't have. How can we address
We
that?
do, and it's interesting because we're classified as an ADI, which is an authorised deposit-taking institution. So that's obviously, again, around the research that people misconceive that perhaps, we're still governed by the same regulations. So to pick up the earlier comment there, I mean, we're governed by APRA, which is the Australian Prudential Regulatory Authority. So we do need to hold adequate liquidity and capital to make sure we can meet needs for customers in those situations that may play out. And then we also are covered under the deposit guarantee product. So yeah, that's very much the case.
Could I just, I'm interested in banking.
Yeah, sure.
In a way that is more values-based.
Yeah.
So I'd love you to kind of respond to some of what Lily has said. Like I'd love to know what my options are in Australia.
Yeah, no, happy to.
And are you Perth-based? Or are you
We are actually, yeah. So, look, happy to. We used to be United Credit Union, as I was talking, so a lot of people might know that name in terms of our sort of grassroots here. And we're a WA-based credit union, so I'll just give you some quick background, if you don't mind, on that. But yeah, we started in 1972, so going back to grassroots, that was about being facilitated to bring together people who needed money and people who had money, and then I guess that's where we are today in terms of now being a $4 billion asset company with just under 200,000 customers and 600 staff that work for our organisation. So we've been in Perth, but there was a bit of a turning point for us in 2008 when we were just what you'd call a WA-based credit union, so we only operated here in Perth and in regional parts of Perth. And as we know, when you're competing against the big four that have a lot of scale, for us to really deliver something meaningful, we needed to look at synergies with other mutuals, and that's other customer-owned banks. So then we went on a strategic path to talk to other mutuals, and then we partnered with Community CPS, which is a credit union that was based in South Australia and ACT, and we came together. So that gave us meaningful scale to say, well, we're committed to the journey that we're on, and the only way we can continue to give back to our customers and communities is to continue growing, because it's that recycled model that what we make in terms of profits doesn't go out to external shareholders, it actually stays in the business. And what we're doing at the moment is a lot of work to say, well, how do we continue to contribute back in a meaningful way and find out the things that our customers are passionate about. And we do wonderful things in the community and quite a variety of different causes that we support. And yes, it starts internally from within the organisation, that we stand back to we're a customer bank. So again, we need to respond to our customers and our communities and stick to our values, which is about being community-based and making sure we deliver social and economical outcomes for the community. It's about being customer first, so about putting our customers first in the decisions that we make, and they're the only people that we're accountable to. And then this whole thing about integrity, so transparent, ethical banking, and then also around mutuality, that notion of you can achieve a lot more as a collective on the collective endeavours you can achieve on your own. So the thing is that we don't have the same deep pockets like the big banks. This is a conversation I was having with Lily today, and it's no different globally for other mutuals, customer-owned banks, is that we're a $4 billion asset company, so we talk about the Australian economy. You only have to look at a Commonwealth Bank or an ANZ that's a $600 billion asset company. So in terms of relativity, it's far, polar opposites in terms of sheer size, but that doesn't diminish the value in terms of what we deliver, because we're passionate about why we exist in the first place, and we'll stay grounded in that. So happy to expand on that and talk outside of the break, but I'm just conscious of, there's other questions I'm going to answer them as well. And it's back to Lily, but
Doesn't have to be.
Man City does some amazing things, and I was saying to Lily today, I went to a World Credit Union conference 2 years ago and listened to other customer-owned banks that are just doing some amazing stuff in the community. And that's where I think for the Australian market there's still a lot of learning we can do, and it's been great to meet Lily and talking about that knowledge sharing is, start to think about, well, what does it mean for us and what more can we be doing and how do we respond, because value propositions in any business and even for us is about, well, what is it that our customers value? Let's put the customer lens on and find out what they value and then how we deliver that value. So we're talking about switching and looking at more of our decision making with the customer lens on. And I talked about some of the initiatives today about having more owner advocacy panels, because again, it's about how do we reach the customer and really understand what they want us to be delivering in a meaningful way, but still deliver the traditional banking products and services that people need that have impact.
Yes, the annual report must make very interesting reading.
It actually is.
Yeah. Just the bottom line, it will be
Right. Yeah. So
what's happening in the community, so they report on that each year.
Yeah. Yeah, and there's been a big effort, especially in the last couple of years, because it's part of the transparency bit too.
Yeah.
It's like helping people really understand where their money is being spent. So it's not just a list of, you look at some annual reports and it's mostly just like numbers, right? And so they're trying to make. So one of the members of the Global Alliance is in Melbourne. It's called Bank MECU. Miku? Yeah. And if you look at their they call it their corporate report, and it's actually a really interesting read. It has, what they're doing in the communities, what their projects are, what, also what they pay their employees, the gender divisions, the it's all in there.
That really makes us more attractive, isn't it? So you read it and you want to.
And you actually feel like and so actually Katrin, who I work with, harps on this, is like if you don't understand it, you know, because actually banking shouldn't be that hard, right? So if you don't understand it, you probably shouldn't do it, right? So this idea that like it should actually, there's no reason it shouldn't be very understandable to people.
It feels like there's a lot more trust somehow in values-based banking than big four.
Yeah, and that's sort of what also from a business perspective, they need, that's what they build on, that's what their brand is, and they need to build that trust. I mean, they're sort of ruined if they don't. Like if they make one misstep and break your trust, that's
Lost.
you're lost, right?
Because we've had some dreadful stories about like Commonwealth Bank advising financial advice, and it's been absolutely appalling. And so, but, you know, whereas I feel now that maybe I could go to your own bank and say, I trust you a bit more. You give me some advice, and I might trust it.
And it's funny, I actually had a great conversation with a loan officer at one of the branches in Vancouver recently, and she was saying a couple years ago there was a person that came, a friend of hers, or sort of an acquaintance, who wanted to switch to Van City, and their rates are competitive, but not quite as competitive as like the big banks, and I think the big five in Canada, and she wanted to switch to Van City, and so, you know, this loan officer looked through all the numbers and what it would cost to switch and all these different things. She said, actually, you know, it doesn't make sense for you to switch to Van City right now. Like, this isn't, you know, and she just gave her a very honest answer that wasn't, she had a lot of money. It wasn't beneficial to Van City, but it was the right answer for this particular person. And so apparently the woman came back and brought her a dozen roses. But things, you know, things like that. You can sort of, you trust that people have your best interests at heart. Which it seems like a very sort of almost fluffy kind of human thing, but it's really important. Yeah, there's no reason it shouldn't, just because it's banking, it shouldn't be, you know. Yeah.
It's quite interesting that point you just made there, because Commonwealth Bank certainly has been in the media for a bit around that.
I've lost all my trust in banks.
Yeah.
That's what's happened.
And
That's
it
really
does then around the culture and the leadership. You have to question at some point in those organisations to have allowed some of that to happen. One of the things that we're proud not to have is sales incentives-based arrangements in the business, because that in some cases can drive wrong behaviours. I guess there's a balance in that. You want to reward good work, but there are other ways to do that rather than just be financially driven around it.
I don't want to hug it.
Sorry, I was going to ask, have you done much, have you looked much into Islamic banking? Because they have been based banking for, well, it's the foundation of their banking system. So I'm just asking, have you done much research?
Yeah, so I've actually been curious about it. I personally haven't. It's funny because now a lot of the, we don't have any Islamic banks as part of the network that we work with. But so the interest rates are getting very, very low, which makes it hard to be a bank at the moment. And so there's actually this question of like, well, you know, Islamic banks don't do interest, right? They don't have, and so how do they actually operate? It's all fee-based. But there's this sort of tension there where consumers, at least in I know in the US, but I think also in Europe and probably in Australia, aren't super excited about fees. You know, so this is sort of like, you know, when banks are looking at how to do business and looking at different models, it can be challenging. But yeah, no, it's funny because I've just been really curious about that, and I haven't really looked into it yet.
And it's just very interesting because you're saying like how values business have been grown, like from your experience, and the fact that Islamic banking is becoming increasingly popular, and now Muslim banks are actually to go offer products that people Islamic traditions. But I think it would be good if they would just go based in general, and I think the idea that sorry.
Do you know if I jump in on that one? So glad you asked that question, because we've just done a bit of a research piece around that.
Yeah.
COBO, which is the Customer-Owned Banking Association, which is the independent body for the mutual sector, has actually been doing some work around Islamic banking and realising, again, that's about that diversity and appealing to different niche markets. And I'm trying to think of a model that's in that. It starts with an S, the Islamic banking. I think you might be able to help me out there. I'm trying to think of it. Yes, thank you, Sharia. Yes, and then the whole notion is built on they don't pay interest, and so there's still another way to facilitate providing mortgages in a way that's meaningful without that they see interest paying out.
Yeah.
So we're actually just doing some work on that at the moment.
And I think it'd be great if it wasn't just labelled as being a Sharia or API. It should just be open to everybody because really their banking is based on values, and I'm pretty sure the majority of people want their money to go to those schools. I think it's definitely something that major should have. And it's proven to be very profitable, so I think it's time to maybe look at other models.
Yeah, there's much difference in profitability between ordinary banking and values based.
I mean, there is a difference in profitability because they're not. So part of the whole premise is that. So for example, like with the, do I do a $500 loan or do I do a $500,000 mortgage? So these banks, I mean, they're businesses and they operate and they have employees and they do well. You're not going to get top dollar salary usually at a values-based bank, but they've been sustainable in the long run, so they are making enough profit. Sometimes that profit, if they're cooperative, is being sent back to their members at the end of the year. But yeah, I think they're less profitable on the whole, but that the profit that they do make is funneled back.
I don't understand how nearly 20% of the population do not have a bank account. Is there any why do they do?
Yeah, so I think it's actually, and I think I might have said it wrong. I think it's 7%, over 7 to 8% doesn't have a bank account, which is still a lot in a country of 300 million. And then 20% don't on the whole are underbanked. So people still get checks. So I know here that people, even their government checks are actually deposit, right?
Yeah.
So not the case in the U.S. So a lot of people, you can get by without having a bank account, and what you do if you get a check is that you take it. So the other service that happens at French financial institutions is check cashing. So if you want cash right away with your check, and you don't have a bank account, or even if you do have a bank account and need the money right away, you take it to a check casher. They'll give you cash right away for some sort of fee, reasonable fee, maybe, I don't know, for a fee, and then they'll get your check later, right? So you can still get cash even if you don't have a bank account. And a lot of it has to do with a long history of racial segregation. So also rural communities, often don't have access to banks. But there's a whole history in the U.S. of banks completely, it's called redlining. You completely shut off districts of cities from banking because they're too risky or because they're too, So it's impressive. I know, it's pretty impressive, yeah. But so it's a reality. So a lot of people just sort of choose, and sometimes it's actually just because people don't sort of really get, why they need a bank, because they've always gotten by without a bank. They're not convenient, so they might have to travel really far to go to a bank, and they can go to the check casher down the street. So part of it, sometimes it's, or they know they could get a bank account, and they're just like, well, this works for me, and this is more convenient.
So where do they keep all their money?
I think a lot of times
matches, I think.
and I think a lot of times people who are underbanked, it's not always the case, but a lot of times they don't have a lot of money to keep. So they're living pretty paycheck to paycheck, so they don't really have to have they don't have the money to have a savings account anyway. Yeah.
Like they have a little wall in the house.
I would say there's definitely some people who bury coal in their backyard, but who are underbanked. But I think a lot of people just don't.
Or on the other end of the spectrum.
Yeah.
And so where does Bendigo Bank fit in?
Yeah, so a similar model. Yeah, again, so we were chatting about that today.
Yeah.
Very similar to being profit bank.
I missed that. How is it? Yeah, but what did you say?
Sorry.
Oh,
I
it's
just
just
saying how different it was.
But it's not community owned, right? It's not customer owned.
In terms of
Depends if it's a community branch or not.
Ah, okay.
yeah.
Yeah, like the Fremantle branch of Bendigo is
But not all of them.
not all.
Yeah,
Interesting.
yeah.
So you got to look for the community branch logo.
Specific ones, yeah. So you have like a 2-3
their model.
They do, yeah.
Excuse me, beyond, I guess, taking your money and depositing it into a value-based bank, I guess, what other things can people do to, I guess, encourage this kind of system of, I don't know, investing beyond just profits, you know, looking at the benefits of the community? I guess for people who are interested in startups, are they supposed to measure their profits beyond just the dollars?
Maybe, I think Kate might be the person to speak to this.
Well, there's lots of people
Yeah.
that can speak to this, but I think it comes back really to what you said about power, like money is power, and so each dollar that you have, what you do with that, one, you're telling the world that you want more of that, so you know, what is it that you do, where do you put your money, and then the other really powerful picture that you brought in was the ripple effect, and I think that's, you know, that's the same. So if you set up a startup, you know, where do you invest your energy? Where could you actually create good in that? And it can be in the small things, like it might be in the paper that you choose to buy, or even, you know, the lots of social enterprises also choose to buy, who gives the crap, toilet paper, you know, it can be in the small actions. But also, you know, how do you, what processes do you use? Where do your profits go? So, you know, there's just so many different points that you can actually do good along the way. And I think money is a really good measure of that too.
Thanks.
Everyone should check their super as well.
Yeah.
It's the one investment we all have, and no one actually checks where their money's going. So, yeah, Australian Ethical Super, I've worked with a lot of people there, and I recommend that a good place to start. There's many service offerings, so definitely, yeah. That's the one thing, you have 9% going into an investment the whole time. Choose where that money goes. If you want to invest in startups, that's possible with those types of funds.
What happens if there's a shift in values of your members, or your members become factionalized and that's a big conflict? How can you address that?
That is a great question. And that's something that, I mean, that's something that the banks, so I don't think that's really happened yet. Like, you can imagine, say, so you're serving your members, and maybe your members are all like, well, we don't care about renewable energy, right? Or maybe half your members do and half your members don't. And I know there's different schools of thought about it, like, because the people at the bank obviously have a set of values as well. And if their members are going one way and they're going another way, they might say, okay, well, we're going to stick, you know, because these banks can also be sort of advocacy organizations in a way. Like, they say, okay, actually, we're going to stick to this particular thing, and they might lose some members along the way. But if they think that it's sort of better for the community in the long run, they have the right to make that decision, right? I don't think they've, and then, yeah, there's that other question of sort of, what if your community is split, or what if your community starts going the other way? To a certain extent, you might, if you're going to stay alive as a business, you might have to sort of go along that way. I think fortunately they haven't, for the most part, had to experience that yet. But it's a big question, and I think another important question that comes up too is when you're creating a community, like, who is that community, right? So when you're creating a community, it means that there's people inside and there's people outside. And so making sure that you're representative, that you're inclusive, that you are accessible. But on the other side of that too, I think that sort of maybe an organization like Beyond Bank or an organization like Van City also attracts a certain type of person. So it's sort of selecting in a way anyway. It's sort of like a self-selection process sometimes. People who care about the environment might choose to go to, like, for example, New Resource Bank in the US. Like, so it's a balance.
Yeah.
And I think that, and this sort of goes into the values-based banking, sort of what the method that these banks use is to stay very in tune to that, and to sort of constantly be making, there's no set way, like, if this happens, then, like, you know, X is our decision and Y, like, because, you know, we have this framework and this is what we do. It's saying, it's trying to be very responsive and trying to be very sort of constantly asking those types of questions. So I don't have an answer to that question, but they're constantly asking themselves, like, where are we going? Why are we doing this? Why are we making this decision? What does it mean for our members? You know, what does it mean for our own values? So that's just a constant process going on day to day in the bank.
In terms of your tour, what has been like the thing like if there was the top 3 of the like customer growth, like each bank is saying. So one big thing here is they don't have, in Australia at least with the credit unions, they don't have facilities available for all these other types of banking you want to do. Are the other banks around the world, what are they saying are like the barriers to customer?
So barriers to customers doing what?
To joining their bank over a traditional institution.
So I'm just, first preface, I'm starting my world tour, so I can give you a better answer in a couple months. But I think it sort of harks back somewhat to my first point, which was that sort of understanding, like this question, like where does my money sleep at night? A lot of people just don't think about that. And so people sort of hypothetically are like, oh yeah, like I have values, I'm pro-environment, I'm pro like whatever, but they don't take that next step and really think about, okay, this is my money that's funding this like, you know, oil drilling in wherever. So I think it's really about getting, the biggest obstacle is really about getting awareness and getting your brand out there, right? So making sure people, and doing it quick, like succinctly, it's actually a marketing question. It's about getting the point across really clearly so people understand too, because, you know, people, there's like greenwashing, there's all these things happening, you know, big mainstream banks are saying, well, we do community investment and we do, you know, this and that, and it's, so how do you differentiate yourself and make it very clear to people, like, we are different, and get that spark of interest so you can then explain why you're different, right? And so I think that's actually one of the big challenges across the alliance is, the alliance sounds like Star Wars or something, but you know, across the network is saying, like, how do we get people in the door? And that's about being very, very clear in very few words about what's the difference.
What would you say?
Well,
sorry,
what would I say in a few words? Oh, give me 5 minutes. Right, and so, but that's me parroting other people. So I actually really like and I feel terrible saying this because I've talked about Vancity so much, but I really like the Vancity. There is good money. Good money works. So you just think about, your money is going to work, right? It's not just it's sitting there. It's like money is working and it's good money and it's doing good things, and you know. So it can be small, like just wording choices like that, but I think things, you know.
How do you find out where your money is being invested for a bank? Like say I deposit with Westpac, so how do I find out where they're depositing their money and investing into?
You could try to go to the bank and ask them.
I highly doubt they'll tell me.
There are some divestment campaigns that will tell you in terms of places, but yeah, the data in Australia is very poor.
And a lot of times.
And Market Force, I think, so there's an organisation called marketforce.com.au, and they've done the research on all the banks in Australia as to what's ethical and what's not. I think it's part of 350.org and the divestment movement. So there was actually a fairly comprehensive understanding of who the policies around this, who doesn't, and who's not saying, sort of thing.
Yes. And I, for example, just opened up my first retirement fund, so an IRA, and I was trying to think I'm going to do something ethical, and you know, it's just investment, and then I just tried to talk to the guy, who is my investment advisor, and they have an ethical fund, and I was like, okay, like who are you actually investing in? Like what's ethical and whatever, and he said, well, it's an index fund, so it's sort of spread so to all these like reaches of the market that there's like really no, they say, well, we kind of invest mostly in this and mostly in that, but like it's like a lot of times, especially in the financial markets, it's so spread out into these tiny little pieces and like all over the market that it's really hard to say, and that's the interesting thing. So that goes back to the real economy bit. So in the real economy, most of these values-based banks are not actually putting your money into these financial markets or derivatives, or they're giving loans.
I noticed that it's just past time, and I know that Lily has a date tonight. So So maybe we'll have another couple of questions and then, yeah.
In terms of the MOOC that you're planning, I mean, what you said it's to share information. Who would be likely to benefit from that MOOC? And can you say any more about its mission?
Right. So it would be almost like taking, like if you're in a university, it would be like taking okay, I'm interested in value-based banking, or I'm interested maybe with some finance, or I'm interested in, conventional banking or mainstream banking, like you might just take a course. So it's gonna have sort of like gonna walk you through a longer version of what I said today. So like what is values-based banking, what its structure is, what is the ownership, so that kind of information. So full on introduction to values-based banking. The idea is that it would sort of, like you all showed up today, anybody who might have a spark of interest shows up, learns more, might start asking questions about where their money sleeps, right? And then the second part is also what I talked about before, which is this knowledge sharing within the bank. So the idea, and particularly with our MOOCs, so a lot of MOOCs are purely online, so I'm sitting in a room alone and I'm watching videos and answering questions or posting on the discussion board. And what we're trying to do, and Katie was part of this with the U.Lab Hub, is that we're trying to also add an in-person element. So say people in Perth are interested in taking this, or people at Beyond Bank are interested in taking this, then they can sort of gather together to discuss, to sort of start to see those connections. So the idea is that it's not just you as an individual, on this website taking this course if you want to take it, but it's also about starting to connect with other people who are interested in it. So we're going to be hosting hubs, probably partly at the banks, or at banks within the network, or also other banks that might be interested, and also tapping into this network of hubs that we built beforehand, to give sort of a space for reflection and connection, and hopefully actually starting to build interest. And it doesn't have to be like we're going to make a bank, but I'm interested in this, you're interested in this, what are we doing with our money, how could we, move forward? That's sort of the goal. That's the bigger dream. And this is sort of actually building movement.
One of the things you mentioned was even like there might even be a chance for sort of global money experiment. So like what happens if everyone that actually does that MOOC, actually puts in $1 or $2 and then actually, decides where that money goes and asks all those questions about what happens if we move our money here or here, like what ripple effects could we actually create through that. I was pretty excited about that one.
I'm good. Sorry, I forgot your name.
Michelle.
I was wondering because I find that credit unions have slowly been increasing because unions, they were generally attached to unions, weren't they? Like coal miners or some sort of have you thought of like perhaps maybe adopting the model? The easiest way to say, comparing it with like the grocery chains, you have the major ones like Woolworths and Coles. Would you consider like getting all the credit unions coming together to become like independent, like an independent association, and that you could all have the same run, but you all operate independently?
It's a really interesting question because I guess this is where I talked about before. We've seen a lot of consolidation in the sector, and going back to what some of our barriers of growth are, is that whole piece around awareness and education, is getting that good news story out about what we actually do. We're not growing at the same rate that the big four are, but we've got a great story to share. We just don't have the same deep pockets to get it out there. And so with the mutual sector now, there would have been, if I go back sort of 4 or 5 years ago, we would have been talking maybe 300-400 co-ops that existed in Australia, which is now less than 90. So it just goes to show you that there has been a lot of consolidation in the sector. And there's a good news story in that too, because there's a realisation that coming together again allows you to do things more meaningful. But in terms of even looking at the cost structure that sits in the business, there's a lot more that can be gained through collaboration in coming together to keep that sector alive, and so that we do remain an alternative to big four banks.
You could really become the fifth pillar, couldn't you really?
Yeah, and the fifth pillar's there right now as a sector, but everybody's doing their own piece in that, so there's a lot to be said about how we collaborate. And we talked a little bit about that today, is that you can create more good together. We talk about that very much from a customer perspective and adding value in the community, but how do mutuals come together and create more of an impact impact, because if you bring them together in terms of sheer size, that's quite substantial in terms of the social impact change that you create.
One more burning question.
Why can't the big
Two
bank,
more?
sorry, the burning question, why can't the big four take into consideration values and, you know, make changes that way?
That's a great question, and you should ask your bank that. I mean, but part of the reason is that part of it is their structure. So when you have a bank that has, and not all banks that have shareholders, because some of the values-based banks do have sort of separate shareholders, but they're all values aligned, right? But a big bank, its main mandate is to make, you can probably speak this better than I can, but its main mandate is to make money and make profit for its shareholders, right? And it's pretty clear that, you know, if you're to reinvest in the community, to sort of do a lot of the stuff that these banks do, it minimizes, doesn't minimize is the right word, but it cuts back the profits at least a little bit, right? And so that's a hard thing to justify to your shareholders, unless they're also values aligned. So it's not that, you know, a giant bank couldn't be a values-based bank at all. Like, I mean, you look at Man City has 500,000 members. That's a big bank, not a huge, big bank. It's very possible. It's just, it hasn't happened because it's so ingrained, I think, in the culture of the organization. So sometimes it's better to have new organizations or different organizations that come up to that level than to try and really change these like behemoth, giant organizations. Because organizational culture is like really hard to change, you know? And you have people that have been banking in sort of a more conventional way their whole career, and then you tell them, well, actually, we're going to start making decisions differently.
Yeah.
They're to say, okay, like, really? That's not an easy thing to shift, but there's no reason it can't happen, I guess.
Yeah, that's true. I mean, you've got your values and you also got your business model, and that's true when you speak to the Big Four. They are driven by two parts there. One is shareholder appreciation, and then the second one is being able to return dividends. So that obviously does play out in the decisions that they make because they're influenced by delivering to external shareholders, which aren't necessarily also customers of that bank. And that's an interesting notion on its own. Yeah.
So a value-based bank would never have shareholders?
Shareholders are our customers. So for us, we talk about being profit per purpose.
Yep.
Yes, we need to make money to continue to effectively give back into the community. But yeah, the only people is the shareholders are our customers, so people that join our organisation and want to be part of something in creating good together. Yeah.
And I'll ask my bang back question.
Good one to ask.
Thank you, Lily. I really like what you said also about the space, the in-between space that banks occupy, this kind of art space, and maybe just on the other side of the big customer, the big bank customer relationship and the importance of relationships. I've been interested in this value-based banking space for quite a long time, 5 years with United Community and Beyond Bank. And down there I can go to the bank manager and have a conversation, and I know who she is and she knows who I am, and it's great. And yet all of this time I've still carried along this bank account from one of the big four banks at the same time. It's another kind of relationship that I'm asking myself, why do I continue with that? What relationship do I have with this dysfunctional entity that I continue in my own way out of, is it fear that something's not going to get into that account, or is it some kind of greed or ignorance that I can just be done with it? And this heart space, I've been studying health a little bit lately, and there's a lot of new medical research around the heart saying that it's not actually a pump that pumps blood around the organs, and that it's like a receiving vessel that receives the blood from the periphery of the organism, and then when it's full it lets it go and lets it throughout the rest of the organs. It's not hoarding anything itself, it's not driving anything itself, it's just in this space allowing the health of the whole social organism, the human organism. Just wanted to...
Did you write that down?
So that might be a beautiful note to end on, really. And And I think for me, it's just, you know, it's powerful even that we're all coming together and actually asking these questions. And, you know, I have this imagination now that each one of you is going to go out and, you know, have conversations with your friends and family and ask this powerful question, where does your money sleep at night?
Change our bank accounts.
Yeah. You know, what are the ripple effects? So, you know, when you said that impact, you know, the bank does that impact mapping, you know, we can all do that. If I spend my money here, what are the impacts of that? What are the ripples of this? So yeah, exciting to go out, have those conversations, keep talking, and we'll look at doing this MOOC here and having a hub. Yeah. So thank you so much, Lily, and also thank you, Michelle, and the Beyond Bank crew for being here as the bank crew, 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 for being here as